Picture this. You wake up one morning, and quantum computing isn't just a cool idea in a textbook, it's a real tool inside supercomputing centers, a real line item in government programs, and a real advantage for the first teams that learn how to use it. That's the moment IonQ is trying to build toward. And when a frontier technology moves from research curiosity to platform people pay for, the market sometimes reprices the perceived leader in a way that can look like a 10x. Not guaranteed, not even likely, but possible, and that possibility is what makes the story so electric. Quick reality check before we go further. This is not investing advice, and 10x by 2027 is a scenario, not a promise. Quantum stocks can swing hard in both directions, and companies can hit amazing technical milestones while still struggling to turn them into durable business results. The point of this video is to track 3 trend lines that, if they keep accelerating, make a massive upside story more plausible than it looks from the outside. Trend 1 is the war chest plus the full-stack expansion strategy. In its third quarter 2025 results, IonQ reported $39.9 million in revenue and said it was raising full-year 2025 revenue expectations to $106.110 million. It also reported $1.5 billion of cash equivalents, and investments as of September 30, 2025, and $3.5 billion pro forma after a $2 billion equity offering that closed October 14, 2025. The structure of that raise matters because it signals how aggressively management wants to play offense. IonQ announced the offering at $93 per share and included additional warrants. In its 10-Q, it described the offering closing on October 14, 2025, and net proceeds of about $1.98 billion after certain issuance costs. Whether you personally like dilution or hate it, the message is, IonQ wanted enough capital to fund multiple product bets at the same time and stay well-funded if markets get choppy. Why does a big cash position matter in quantum? Because quantum isn't one race, it's 5 races at once. Better hardware, lower error rates, better software tooling, real customer workflows, and the ability to scale production and support when customers want something enterprise-grade. Underfunded companies get forced into one narrow lane. With billions, IonQ can build faster, hire aggressively, absorb setbacks, and still keep enough runway to reach the next milestone without tapping the market every time sentiment turns against speculative tech. And IonQ has been using capital to widen the platform, not just polish one device. In 2025, it completed multiple acquisitions that extend beyond pure computing. IonQ announced it completed its acquisition of Oxford Ionics on September 17, 2025, and completed its acquisition of Vector Atomic on October 7, 2025. Moves it described as strengthening its quantum computing roadmap and adding advanced quantum sensing capabilities. In plain English, they're trying to be the company with the most complete toolkit: compute, connect, secure, and sense, so they can win more categories as quantum becomes real infrastructure. Trend 2 is the networking and security wedge, especially into government and critical infrastructure. A lot of people assume quantum is only a quantum computer. IonQ is betting that the broader quantum platform networking and security now, computing at larger scale over time, creates earlier and more dependable revenue streams. You can't wait for every company on Earth to have a quantum advantage use case, but you can sell quantum-safe networking and secure communications infrastructure to customers who care about security today and can pay for it today. In January 2025, IonQ announced a $21.1 million project with the U.S. Air Force Research Lab to push secure quantum networking forward. In September 2025, IonQ announced it organized IonQ Federal to unify its government-facing quantum computing and quantum networking initiatives, explicitly calling out over $100 million in contracts with the U.S. Air Force Research Lab and work with agencies like DARPA and Oak Ridge. That's a straight line. Get embedded in programs that have budgets, urgency, and multi-year timelines, then expand from pilots into deployments. And it's not just talk. IonQ has been building the plumbing. It completed the acquisition of quantum networking company Qubitech's assets in January 2025. It announced plans to acquire a controlling stake in ID Quantique and a strategic partnership with SK Telecom in February 2025, focused on quantum-safe networking and detection systems. Then there's the boldest version of the networking thesis, space. In July 2025, IonQ said it completed its acquisition of Capella Space to begin developing a space-based quantum key distribution network. Why does this trend connect to a potential 10x? Because platform companies can stack revenue streams. If IonQ becomes a trusted vendor for quantum computing plus quantum security plus networking deployments, the upside case isn't one product takes over. It's multiple product lines compound together. Hardware sales, cloud access, long-term support contracts, networking deployments, and application work that turns pilots into ongoing spend. Markets tend to pay higher multiples when they believe a company can grow through several lanes at once, instead of relying on a single breakthrough. Trend 3 is the technical inflection toward performance that unlocks real deployments, not just lab demos. In quantum, qubit counts get headlines, but fidelity and usable performance decide whether the machine can do meaningful work. In October 2025, IonQ announced it achieved 2-qubit gate fidelity exceeding 99.99%, calling it a world record result and a step toward scaling to fault-tolerant quantum computing. In the same Q3 2025 update, IonQ also said it hit its #AQ64 milestone on IonQ Tempo 3 months ahead of schedule. Even if you treat any company-defined metric with healthy skepticism, what matters is the direction. They're pushing toward usable capability and trying to ship it on a timeline that customers can plan around. And here's the most real-world proof point right now. On December 23, 2025, IonQ announced it finalized an agreement to deliver a 100-qubit IonQ Tempo system to KISTI in South Korea, to be integrated into KIST TI-6 Hanggang, described as the country's largest high-performance computing cluster. IonQ framed it as the first hybrid quantum classical on-site integration in South Korea, accessible through a secure private cloud for researchers and enterprise users. That's not rent some time on a machine. That's infrastructure installed, integrated, and positioned to be used by a broad ecosystem. Deployments like that can create a flywheel. An HPC center installs the system. Researchers and enterprises build workflows. Workflows generate results and references. References attract more partners and budgets. Budgets fund upgrades. Upgrades improve capability, which attracts more serious use cases. When that flywheel starts, the company that owns the installed base often becomes the default option because switching costs rise and talent clusters around what's already working. Distribution can also amplify adoption. IonQ says its systems are available through major cloud providers, and cites work with AWS, AstraZeneca, and NVIDIA as examples of workloads explored on its platform. Cloud access lowers friction. More developers can test ideas, and pilots can scale faster. So how do these three trends combine into a 10x? By 2027. In the bullish scenario, IonQ uses its capital advantage to keep shipping systems and improving fidelity, while also monetizing networking and security in programs that pay today. Each high-profile deployment becomes a proof point that converts skeptics into customers. If growth accelerates beyond what the market expects, the valuation framework can change from speculative R&D to early platform with expanding TAM, and that shift is where huge moves come from. If you want a quick mental model, think in milestones rather than vibes. A 10x path by 2027 requires some mix of more system deliveries like KISTI, stronger repeat business and multi-year contracts, evidence that quantum workflows are saving real time or money in specific niches, and technical progress that keeps shrinking the gap between good demo and reliable production. IonQ's own 2025 outlook also reaffirmed an adjusted EBITDA loss range, which is a reminder that this is still a build phase, and the company still has to translate progress into a business that scales efficiently. Now, the honest part. What could break the story? 1. Dilution and spending. Raising big money is helpful, but only if it turns into durable value. Otherwise, shareholders pay for growth that never arrives. 2. Competition. Multiple approaches superconducting, trapped ion, neutral atoms, photonics are racing, and a breakthrough elsewhere can change the narrative fast. 3. Timeline risk. Quantum advantage in commercially important problems might show up in a few niches before it's broad, and markets can get impatient if soon turns into someday. Here's the practical way to follow IonQ without getting trapped by the hype cycle. Track 3 scoreboard items that match the 3 trends. First, revenue and contract traction versus guidance and expectations, because ultimately the business has to keep proving it can monetize progress. Second, expansion in government, security, and networking programs that look repeatable, not one-off. Third, technical progress that translates into deployments, systems delivered, integrated, and used by serious customers, not just celebrated in press releases. Closing thought, the quantum boom won't reward the loudest headline. It'll reward the companies that turn physics into products and products into platforms. IonQ is positioning itself to be that kind of company, cash-rich, platform-focused, and increasingly tied to real deployments. Whether that becomes a 10x or a cautionary tale will come down to execution, not vibes. Stay curious, track the milestones, and remember, in frontier tech, the most important word isn't will, it's if. That's why the next 24 months matters so much.